It's time now for today's strategy session. As investors await key catalysts for stock gains, Wall Street is bullish. Analysts at Barclays and JP Morgan both calling for more gains ahead. So how much upside is there? Joining us now, Michele Schneider, MarketGauge.com's chief strategist. Michele, it's great to have you on this morning. Talk to me about what you are foreseeing when it comes to how much more room to run the market has without a clear key catalyst in sight.
Well, certainly the milestone of 6,000 is something that everybody's excited about. And we can see that the SPYs and the Qs are really close to their all-time highs. So that's when I like to watch what I call the inside sectors, actually a phrase coined by Stanley Druckenmiller. And that would be the retail, the transportation, and the small caps. And they have a lot of catching up to do. Currently, if we're looking at IWM, the high was 224. It's trading around 214. Not so bad. Transportation, though, really lagging behind that. And interestingly enough, although retail has been leading lately in those inside sectors, it's still almost 30% away from its all-time high that was made in 2021. So there's a couple of things to be aware of, and that is, it's great to see the growth stocks go, and we've seen this over and over and over again. But we really need to see things that will actually stimulate the economy participate. And of course, that would be manufacturing, most importantly, the consumer, and then how robust goods and services are moving. And we're not seeing that yet. So I'm cautious here in terms of adding risk.
You know, one of my favorite technicals to track is a very simple one, and it's just the moving averages here, especially trying to get a gauge of the 200-day moving averages versus the 50-day moving averages that we're seeing. And as of right now, on the 200-day, this market is relatively split in terms of the companies that are trading above or below. It's almost 50-50, but the 50-day moving average a little bit more weighted to trading above that. I wonder from a technical analysis perspective, what your key technical indicator is that you're watching right now to really get a gauge of where spirits are transpiring and sentiment within the market.
Well, first of all, I love moving averages and I love the 50 and the 200. So let's just broaden out that time frame a bit and go to the weekly moving averages. And that's really where I think is most interesting right now. So for example, semiconductors, they're back over their 50-week moving average. And the 50 is above the 200, which is also important. You want that positioning to show more of a bullish edge, and it is. The same thing with retail. It got over its 50-week. That's really encouraging. So I'm certainly not trying to be negative. I'm just trying to look out. And then if you look at the small caps, they're below the 50-week. If you look at transportation, it's below the 50-week. And regional banks are sitting right on it. And I like to look at the regionals as opposed to the actual big banks, and I know you mentioned the financials in the beginning. So, and biotech, by the way, is just under everything. So that has a lot to do to prove that it can come back. That's what I'm looking at, because from a weekly standpoint, we need to get those things back into these bullish weekly phases, and we're halfway there.
Let's talk about the tech sector within that context as well, because if you look at the 6-month price chart for all members of the Mag 7, the only one trading below its 50-day moving average is Apple. How does that frame how you're thinking about those Mag 7 stocks right now?
Well, interesting about Apple, because remember, Apple used to be the thing that led the market, right? So if Apple was up, everybody felt very bullish, and now, of course, it's fallen out of bed for its own reasons. In terms of the rest of the Mag 7, yeah, I mean, it was such a gift back in April after we saw that big washout and things started to come back. And using Brad's 50-day moving average, especially when they were clearing the 50-day moving average, if we're looking at NVIDIA, I'm a little bit concerned about piling in right now in that area. I think there are other areas of the market that are far more interesting to me that have a much more limited risk and a much greater upside potential.
Mish, while we have you here, I just got a note that came across from UBS in my inbox, and they're talking specifically about stability and how the markets should be evaluating stability in the U.S.-China trade relationship here as negotiations continue to move forward. What most notably would be the needle mover for you to really get a sense of how much the volatility that the markets have had to endure tied to this relationship is in the rearview mirror, and then there's just more of a prospect for stability that some of the larger institutions trading are looking at right now?
Well, I believe that it's already in the rearview mirror and has been. So now it would have to be something really dramatic like they don't come to the table and Trump goes back to threatening huge tariffs to shake the market up. I think the market is anticipating anyway, the worst is over. So that's kind of how we're going. The tariffs are there. I think the biggest impact of the tariffs right now is that we haven't really seen how they will reflect in price as we're going into some of the inflation indicators, PPI, CPI this week. And I think that's what you have to keep an eye on, especially since you're looking at a lot of commodities here. Listen, if China and US play nice, that would be good for commodities. If they don't play nice, that may also be good for commodities. And that's why I don't like anyone to forget that conversation right now. That's where there is a tremendous potential opportunity. Not only could we see both the market and commodities go up, but we can also see at some point that split. So China's there, but it's more about how cooperative they are and how much they're going to need from us. They've already split to other areas or not, but I'm not too worried at this point.
Mish, thanks so much for taking some time just after the opening bell. Good to see you.
Thank you.